What is going on, fellas? Back again with another market recap, and today is a little bit different. Why? Because Donald Trump is now the official president of the United States from yesterday. What did that mean for the market? It meant that we had a holiday yesterday. Today is the post-holiday trading session. So what can you expect? You can expect manipulative price action, choppy price action, or just poor market conditions. But I'm going to run you through what happened today so you can see that into the next post-holiday trading session. Straight into the charts from the high time frame. You can kind of see here the daily highs, which are in quite close proximity to where price is at the minute. With that in mind, I was marking out high time frame PD arrays such as this daily order block there and this 4-hour FEG, which was manipulated straight into during the Asian session. So you can kind of see here where it opened up and we immediately dumped, but then came back during the end of the Asian session towards the London session. However, we did not provide any manipulation during the new day opening price, which is at midnight, completely different to the daily opening candle. So definitely make note of that. That meant that we were expecting some type of manipulation straight away from the market opening. I did actually write that in my trading plan because we haven't actually had any manipulation or taken out any key low at any point after the new day opening price there. So straight away from the market get-go, 9:30, you can see we dumped. And what was I using? I was using this imbalance there, or the new day opening range gap. With the opening range gap, I marked out these quadrants here and I wanted to see where would price react from. You kind of see here, it kind of filled the majority of it, came back into this fair value gap there, and then eventually closed it. So I wanted to tie this in with any imbalances or sell side liquidity so I could frame a reversal. But as you can see, we manipulated underneath the midnight price here, also taking out the short-term sell side. Me personally, I didn't think we'll come this low. However, I was expecting manipulation. I wasn't shocked by this, and I was still happy to look for longs. I did not take a trade today because I couldn't execute during when I wanted to, but I will run you through what happened. From a 15-minute perspective, I was looking, can we have a reaction from here? Can we have a change in the state of delivery so we can eventually try to take out these highs? As you can see, we have equal highs here and then the previous daily highs. So for me, that was still the big draw on liquidity. So 15-minute change in the state of delivery there, as you can see, tied in with the SMT divergence after taking the sell side. Going into the lower time frame on the 1 minute, you can kind of see here we surpassed several inversion fair value gaps here. I just marked the whole bulk of it. Here was where we had the closure above the 15-minute candle for that change in the state of delivery. So I wanted to see if this level would hold. We'll get a period of accumulation, so then we could eventually move higher. However, like I've previously said, as we're outside of a macro period, this accumulation kind of stemmed from 20 past 10, going all the way up to 11 o'clock. We're in this zone. And with that in mind, I was looking for any manipulation, taking out any sell stops, which we had there with this low. More than not, the market is going to try to take that out before it will eventually run. As you can see, I waited patiently for the macro period. Didn't get that movement during it, which you would expect here. You would expect to run. As you can see, we've got several highs here, some failed swing highs. Didn't get that run. So what happened, we eventually came back into this range there, this inversion here, and then also back into this order block there. So from that point there, that is when the market eventually did run. So it was a late run on liquidity. If the market doesn't appear to run even under these choppy conditions, right, you can always expect it during either the end of the silver bullet or going straight into lunch at 12 o'clock, which will be at the end of the, the AM session macro from here, from 10 to 12. And that is exactly when the market ran. So as soon as price surpasses this fair value gap here, we now have shifted order flow and the market can undergo its buy program to go to those targets that we had. Here is probably the best entry you could have taken today if you didn't take the original short, or perhaps one of these here where sell stops were taken and we came back into an FEG at discount. So either one of those entries would have been very good. But as I said before, it's not in my trading plan, especially after holiday trading days. So for me, it wasn't worth the risk, but we did eventually come to take that liquidity up there. And then you can kind of see, we kind of stayed within this range, retraced a little bit going into the PM session. But again, not taking anything. We'll be waiting for tomorrow. So that was a very quick market review today. And again, it's very important to know when to avoid trading or how to trade these types of price action under these different circumstances. So yeah, very quick one from me, and I will catch you in the next one. Take it easy.